The AI revolution in finance. The financial world is changing at an unprecedented pace. Every day, banks, investment firms, and financial institutions face a growing sea of data, stricter regulations, and increasingly sophisticated risks. The challenge isn't just managing money anymore. It's managing complexity, compliance, and the ever-present threat of fraud or operational failure. Artificial intelligence, or AI, is no longer a futuristic concept. It's here, reshaping the financial sector in ways we are only beginning to understand. From detecting subtle patterns in transactions to predicting market volatility, AI offers tools that traditional methods could never achieve. But what does it really mean when we say AI is transforming risk and compliance? At its core, it's about using advanced algorithms and machine learning to not only identify risks before they materialize, but also to ensure that institutions comply with an ever-expanding web of regulations. It's about precision, speed, and foresight, applied to a domain where mistakes can cost billions. For years, compliance teams relied on manual checks, spreadsheets, and periodic audits. Risk management was reactive, often identifying problems only after they had escalated. Today, AI changes that equation entirely. By processing massive datasets in real time, AI systems can detect anomalies, uncover hidden correlations, and predict outcomes with astonishing accuracy. The implications are profound. Not only can financial institutions avoid losses, but they can also redefine how they operate, moving from reactive systems to proactive, predictive frameworks. AI is no longer an optional tool. It's becoming the backbone of modern finance, a silent partner guiding decisions, shaping strategies, and redefining what it means to manage risk effectively. AI and the transformation of risk management. Risk has always been the shadow that follows every financial decision. From investment portfolios to credit lending, the potential for loss, fraud, or regulatory violation has shaped every strategy in the financial world. Traditionally, managing this risk relied on human judgment, historical data, and statistical models that were often rigid and slow to adapt. While these methods worked to an extent, they were inherently reactive and limited by the volume of information humans could process. AI changes that equation entirely. Machine learning algorithms can analyze millions of transactions in real time, identifying subtle patterns and correlations that would be invisible to even the most experienced analyst. These systems can flag anomalies that may indicate fraud, insider trading, or operational inefficiencies long before they escalate into crises. What used to take weeks of investigation can now happen in hours or even minutes, reducing exposure and allowing for faster, smarter decision-making. AI also introduces predictive capabilities. Using historical data and real-time market indicators, AI can model a vast array of scenarios, from credit defaults to liquidity risks, providing financial institutions with actionable insights. Risk managers no longer have to rely solely on historical averages or rigid models. Instead, they can make decisions informed by dynamic, continuously learning systems that adjust as new information flows in. One of the most powerful applications of AI in risk management is fraud detection. Traditional rules-based systems often miss sophisticated fraud schemes because they rely on static thresholds. AI, on the other hand, can adapt to new methods of deception, learning from patterns across multiple institutions and industries. This ability to anticipate and respond proactively fundamentally changes the way financial institutions safeguard assets and maintain trust. Beyond fraud, AI is also transforming credit risk assessment. By analyzing a far broader range of data points, including behavioral patterns, social data, and alternative financial indicators, AI can provide a more nuanced evaluation of creditworthiness. This allows lenders to make more informed decisions while reducing default rates, balancing profitability with responsibility. Ultimately, AI and risk management represents a shift from reactive to proactive finance. Institutions are no longer waiting for risks to materialize. They are predicting them, preventing them, and optimizing strategies with unprecedented accuracy. It's a transformation that doesn't just improve efficiency, it fundamentally reshapes the way financial institutions think about uncertainty, accountability, and resilience. AI's impact on compliance and regulatory oversight. Compliance has always been one of the most resource-intensive areas of finance. With regulations evolving constantly, both domestically and internationally, financial institutions face enormous pressure to stay within legal boundaries while still maintaining competitiveness. Historically, compliance work involved extensive paperwork, manual verification, and constant monitoring of employee activity, transactions, and client interactions. Mistakes or oversights could lead to hefty fines, reputational damage, or even legal action. AI fundamentally changes this landscape. By integrating machine learning algorithms into compliance systems, institutions can automate the monitoring of vast volumes of transactions, flagging suspicious activity without human intervention. These AI systems are capable of scanning through millions of transactions in real time, identifying patterns that indicate potential money laundering, insider trading, or violations of sanctions. This is not just automation, it's intelligent, adaptive oversight. One of the most significant advantages of AI in compliance is its ability to learn continuously. Traditional compliance programs are static, rules are set, and exceptions are handled manually. AI, however, can detect evolving patterns, adapt to new threats, and even predict potential compliance risks before they occur. For example, if a new type of fraudulent activity emerges, AI systems can recognize early indicators and alert human compliance officers, minimizing exposure and accelerating response times.
Furthermore, AI facilitates cross-border regulatory compliance. Financial institutions operating in multiple countries face a web of differing rules and reporting requirements. AI can integrate these complex regulations into a unified monitoring system, ensuring that transactions and operations comply simultaneously with multiple regulatory frameworks. This capability not only reduces errors, but also saves substantial time and operational costs, freeing compliance teams to focus on higher-level strategy and risk mitigation. AI is also transforming how compliance reports are generated. Instead of manually collecting data and preparing spreadsheets for regulators, AI can produce real-time, dynamic reports that reflect current risk exposure, transactional anomalies, and operational compliance. These reports are more accurate, timely, and detailed than traditional methods, enabling regulators to make better-informed decisions and institutions to demonstrate accountability effortlessly. The implications extend beyond efficiency. AI-driven compliance strengthens trust between institutions, clients, and regulators. By providing transparent, data-backed oversight, financial institutions can demonstrate that they are not only following the rules, but actively managing risks with sophisticated, forward-looking tools. This level of reliability is essential in a world where regulatory scrutiny is intense and public expectations for ethical, responsible finance are higher than ever. In essence, AI in compliance is no longer just a support tool, it is becoming a strategic pillar. Institutions that embrace these technologies are not merely automating tasks, they are fundamentally redefining how compliance functions, making it smarter, faster, and more resilient. Real-world applications and case studies. The impact of AI on finance is no longer theoretical, it is happening today across institutions of all sizes. Leading banks, investment firms, and fintech companies are deploying AI systems to tackle risk and compliance challenges that were once thought insurmountable. These real-world applications illustrate both the power of the technology and the breadth of its potential. One striking example is in fraud detection at major banks. Institutions like JPMorgan Chase and HSBC are using AI algorithms to monitor millions of daily transactions, identifying unusual patterns that could indicate fraudulent activity. These systems can detect anomalies that might otherwise go unnoticed by human analysts, such as subtle deviations in transaction timing, unusual transfer amounts, or atypical cross-border flows. By catching these patterns early, banks can prevent financial loss, reduce liability, and enhance customer trust. Similarly, AI is transforming anti-money laundering efforts. Financial institutions are legally obligated to detect and report suspicious activity, a task traditionally performed by teams sifting through vast data sets. AI now enables these teams to analyze transaction networks, client behavior, and even unstructured data, such as emails or documents, to identify suspicious activity more efficiently. HSBC, for instance, has reported that AI-enhanced anti-money laundering monitoring reduces false positives significantly, allowing compliance teams to focus on genuine threats rather than wasting resources on routine anomalies. In credit risk assessment, AI is providing a deeper, more nuanced understanding of borrower reliability. Fintech companies such as Upstart and Kabbage leverage machine learning to analyze unconventional data points, including employment history, spending patterns, and digital behavior. This approach allows lenders to extend credit to individuals and small businesses who may have been overlooked by traditional scoring systems, while also minimizing default risk. In this way, AI is democratizing access to finance without compromising prudence. Regulatory reporting is another area where AI is proving transformative. Firms operating across multiple jurisdictions are often required to prepare complex reports with strict accuracy and timeliness. AI systems can generate these reports automatically, integrating data from diverse sources and formatting it according to varying regulatory standards. This reduces the risk of human error, ensures compliance with multiple regulatory regimes, and frees staff to focus on strategic analysis rather than administrative tasks.
AI is also helping risk managers anticipate market volatility. Using historical market data, real-time trading signals, and macroeconomic indicators, machine learning models can forecast potential market shifts, providing actionable insights to portfolio managers. By predicting patterns of risk before they fully materialize, AI empowers financial institutions to adjust strategies proactively, mitigating potential losses and capitalizing on emerging opportunities. Case studies from global institutions further highlight AI's impact. Citibank, for example, has integrated AI-driven monitoring systems that flag unusual trading activity and provide risk scoring for new clients. This allows compliance officers to prioritize high-risk transactions, ensuring regulatory standards are met while optimizing operational efficiency. Similarly, fintech firms in Europe and Asia are using AI to streamline cross-border payments, detect fraud, and comply with local regulations, demonstrating that the technology is effective across diverse financial ecosystems. Ultimately, these real-world applications show that AI is not a niche innovation. It is a central component of modern financial strategy. From detecting fraud to predicting market risk, AI systems are enabling institutions to operate with precision, agility, and foresight that were previously unimaginable. Challenges, ethical considerations, and the future outlook. While the benefits of AI and risk and compliance are clear, the integration of these technologies is not without challenges. One of the most significant hurdles is data quality and availability. AI systems rely on vast amounts of accurate, high-quality data to make predictions and identify risks. Incomplete, biased, or inconsistent datasets can lead to errors, misclassifications, or false alerts, potentially creating new types of risk instead of mitigating them. Ensuring robust data governance is therefore essential for the successful deployment of AI in finance. Another critical challenge is algorithmic transparency. Machine learning models, particularly deep learning systems, can be highly complex and opaque. This black box nature makes it difficult for regulators, compliance officers, and even executives to fully understand how AI reaches certain decisions. Financial institutions must find ways to balance predictive power with interpretability, ensuring that automated decisions are auditable and explainable in the context of regulatory compliance. Ethical considerations are also at the forefront.
AI has the potential to introduce or amplify bias, particularly when analyzing creditworthiness, risk scoring, or customer profiling. For example, if historical lending data reflects past discriminatory practices, AI systems may inadvertently perpetuate those biases. Responsible implementation requires careful model design, continuous monitoring, and inclusion of fairness and equity measures to prevent unintended consequences. Cybersecurity is another area of concern. AI systems themselves can become targets for attacks, including data poisoning, adversarial manipulation, or hacking attempts that exploit vulnerabilities in the model. Protecting these systems requires robust security protocols, continuous monitoring, and contingency planning, especially as AI-driven decisions increasingly influence large-scale financial operations. Despite these challenges, the future outlook for AI in finance is overwhelmingly positive. Experts predict that AI will continue to expand its role in risk prediction, compliance monitoring, and strategic decision-making. As algorithms improve, models will become more adaptive, capable of responding to evolving threats, market volatility, and regulatory changes in real time. Institutions that embrace AI proactively are likely to gain a significant competitive advantage, reducing operational costs while enhancing trust and reliability. Moreover, collaboration between regulators and financial institutions is expected to increase. Regulatory sandboxes and pilot programs are enabling AI applications to be tested in controlled environments, providing insights into best practices, potential pitfalls, and the ethical deployment of these technologies. This cooperative approach ensures that innovation progresses without compromising safety, transparency, or fairness. The long-term implications are profound. We are moving toward a financial ecosystem where risk management is predictive rather than reactive. Compliance is automated yet auditable, and decision-making is informed by insights that humans alone could never generate. AI will not replace human judgment, but it will augment it, empowering financial professionals to make faster, more informed decisions while also shaping the strategic direction of their organizations. In essence, AI is not just transforming finance, it is redefining it. By integrating intelligence, adaptability, and ethical oversight into the core of risk and compliance frameworks, the financial sector is entering an era where risk management is predictive rather than reactive. Compliance is seamlessly integrated, and decision-making is informed by insights that humans alone could never generate. AI will not replace human judgment, but it will augment it, empowering financial professionals to make faster, more informed decisions while also shaping the strategic direction of their organizations. In essence, AI is not just transforming finance, it is redefining it. By integrating intelligence, adaptability, and ethical oversight into the core of risk and compliance frameworks, the financial sector is entering an era where risk management is predictive rather than reactive. Compliance is seamlessly integrated, and decision-making is informed by insights that humans alone could never generate. Global implications and conclusion. AI's impact in finance is not confined to a single institution or country. It is reshaping the global financial ecosystem. Cross-border transactions, international regulatory compliance, and multi-jurisdictional risk management all stand to benefit from AI's capabilities. For multinational banks and financial firms operating across continents, AI enables a unified approach to monitoring risk and ensuring compliance, providing real-time insights that can guide decisions across multiple markets simultaneously. The integration of AI into international finance also promotes harmonization of regulatory standards. As AI systems monitor compliance across various jurisdictions, inconsistencies and gaps in enforcement become easier to identify, enabling institutions to align operations with global best practices. This creates a foundation for smoother cross-border transactions, more reliable reporting, and reduced operational friction. Financial institutions that leverage AI in this manner can navigate the complex web of international regulations more efficiently, avoiding costly errors and delays while building trust with regulators worldwide. AI also plays a pivotal role in emerging markets. By enabling sophisticated risk assessments and predictive modeling, AI allows banks to extend financial services to previously underserved populations while minimizing exposure to credit and operational risks. This not only drives financial inclusion, but also strengthens the resilience of global financial systems. Countries adopting AI-driven frameworks for compliance and risk management are better positioned to attract foreign investment, foster innovation, and remain competitive in an increasingly digital financial landscape. The transformative potential of AI extends to crisis management and systemic risk mitigation. During periods of market volatility or economic uncertainty, AI can provide predictive insights that help institutions anticipate shocks, manage liquidity, and adjust portfolios proactively. This capacity for foresight and adaptation strengthens the stability of financial networks, protecting both institutions and their clients from cascading failures. Ultimately, AI is more than a tool. It is a strategic partner in redefining the financial sector. It allows institutions to operate with greater efficiency, precision, and resilience, while simultaneously enhancing transparency, accountability, and ethical responsibility. The synergy of human expertise and artificial intelligence is creating a financial landscape where risk is managed proactively, compliance is seamlessly integrated, and decision-making is informed by insights that humans alone could never generate. For investors, regulators, and financial professionals alike, the message is clear. AI is not simply a technological upgrade, it is a paradigm shift. Institutions that understand, adopt, and integrate AI
thoughtfully will shape the future of finance, setting new standards for how risk and compliance are managed in a complex, interconnected, and rapidly evolving global economy. As we look to the horizon, the promise of AI in finance is immense. It empowers institutions to make smarter decisions, fosters global collaboration, and transforms the very way we conceive of money, risk, and trust. The era of reactive, manual, and fragmented risk management is giving way to one of predictive, intelligent, and unified oversight. In this new era, AI is not just an innovation, it is the foundation of the future of finance.